Still very much up 1% on our benchmark indices, 44.47. That's pretty much close to the high of the day. So it's looking like a good morning of trade, at least for the time being. Lots of buying action seeing back in some of the stocks like Hindustan Unilever. It's up around 4%. Some of this, of course, would be short covering as well, considering the way the market fell in a very aggressive fashion yesterday. L&T 3.5%, Siemens, DLF, some of the names that really stand out in the frontline space. But let's turn the spotlight now on Allied Digital. That's the company in focus on this leg of the show. Nitin Shah, CMD, is joining in to talk about the growth plans and the prospects going forward. Mr. Shah, morning to you and thanks very much for being with us. There's been a lot of buzz and speculation about this so-called $100 million deal that you seem to have tied up in the US markets. Can you share any details with us? Give us some clarity.
Let me clarify. We have been looking out for a company in other geography, not in US. We've been looking at the mandate, but let me tell you clearly that we haven't signed up any deal as such, and we have not even given a term set.
Okay.
We're looking after some acquisition because of the success that we have got in US, and in just about a year's time, we have quite good penetration in the US market because of the acquisition. So we thought probably let's enter into Europe market also in the same way. So we're looking out for some mandate, but as on today, we haven't formed up a plan yet.
Okay, so let me clarify this one step at a time. A lot of media reports suggest that you have some kind of an outsourcing deal, services deal with an OEM company in the US, and this could give you about $100 million in terms of revenues. You're saying that's not the case?
No. There are two different parts. So one is inorganic growth, acquire a company in Europe, which we have not zeroed down to anything as such in Europe. However, the second story that we have been talking about is definitely true, that we have tied up with one of the top 5 OEM companies who manufactures PCs, desktops, notebooks and servers. So what we have done is it's a game-changing strategy. Basically, they will be selling their product. On top of that, they'll be selling services which customer will get under white label from that manufacturer, and the service will be provided remotely from India from our company.
Okay, but you're not pursuing any acquisitions right now. Are you in talks with any company within any international geography?
Yeah, we are in talk with few companies, but we have not formed up our plan.
Okay, so this is a prospective acquisition that you're talking about. Any sort of...
Okay, let me clarify two things once again. One is a business deal that we have signed up in USA,
right,
which will give us a good upside in our business.
Absolutely.
As far as the managing remotely the desktop and infrastructure what they produce and they manufacture. That is true, and that we are very bullish about it in US market. However, if you're talking about an acquisition of a company in Europe, that's something which I would like to clarify. That's not something that we have signed up as on yet today.
Okay, but are you talking to companies for the possibility of an acquisition? I'm talking about the possibility of inorganic growth. If so, what's the size of the company, and would you then have to sort of raise funds, or do you have internal accruals that gives you confidence of going in for this kind of an acquisition?
Okay, we are looking out few companies in Europe. The whole thought process in terms of getting a success in US, and in just 1 year's time we could penetrate into the US market in relatively very significant way. So we thought probably that's the only way that we can go to other advanced market like Europe and Australia. So we have been looking and talking to some few companies out there for inorganic growth, and the ticket size I can't tell you right now. It probably may vary from $20 million to $100 million. And as for the investing in that company is concerned, we have different types of products that we could make use of that. Probably we have our own reserve. At the same time, our company is highly unleveraged. Our debt equity ratio is just about 0.1. So probably we might also use debt, and also at the same time we might look out for some kind of equity also, just to latch on that acquired company to show an interest in our company's growth.
How soon could you firm up your plans? Anything that's on the horizon in the next couple of months?
It's like, when you look at the company, all of thought process that has to go in. We're going to look upon their management style, the business model. There has to be synergy in terms of the balance sheet also. We're going to look at it. And if we come across something which is very similar to what we have acquired in USA, which is endpoint technology, we would not hesitate. But so far, we are still trying to identify the right one.
Okay, so just stay on with us. Hold on to that. Thought should pull up the Aditya Birla Nuovo stock as well. You're seeing the flashes on the screen. For the time being, it's advantage Aditya Birla. That's what it looks like. There was a case that the IT department had filed. The IT department was chasing Aditya Birla Nuovo for evasion of tax. That's what they called it, because of the transaction that involved Idea Cellular when Aditya Birla Nuovo actually purchased AT&T's stake in Idea Cellular. So the IT department felt that this calls for capital gains tax to be paid out. This was the matter that actually went all the way up to the Bombay High Court. For the time being, it's interim relief that's come through for the group. 1% up on the Aditya Birla Nuovo stock. We'll get you, Arun Anandgiri, in just a bit with more details and more clarity on where the matter stands right now. But Mr. Nitin Shah of Allied Digital still very much with us. Let's come to the business now, Mr. Shah. What's the visibility that you're getting in terms of an uptake in volumes, and what's the kind of margin picture that's panning out in some of your key geographies?
Let's talk about US and India. Of course, as you know that we have pan-India presence and we have been operating in India for last about couple of decades. So that's a different scenario in US. So let me first talk about what we have been seeing a prospect in USA. We have been seeing there is an improvement sign that's going on in US economy compared to last quarter. But if you really look at IMS is one area that everybody is looking out for cost cutting. If you've seen there's a lot of slowness going on in the US market and people are looking at cutting the cost. So first thing that they've done is remove the people and they look at the other expenditure. They find managing the right infrastructure is another pain area for them, and they're looking out for other alternatives whereby they can see whether they can reduce that cost. So probably a lot of traction that is happening in US market, especially in SME segment, where they are looking out for a alternative, cheaper solution to support the IT infrastructure, and that too remotely from India. So that's where we have been seeing, and that's where we have also grown by 5% compared to last quarter this year.
All right, Mr. Shah, we'll have to wrap it up on that note. Thanks so much for joining us and giving us some details and perspective on the business. That's Allied Digital for you. Clarifying on the other side with the trading calls at ICICI Securities as far as the mid-cap markets are concerned.